Repos, 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 and more repos. Auto repossessions are becoming a huge problem and could cause our next financial crisis. We have so many repos going through the system right now, there are not enough recovery drivers to even pick up the ones that need to be picked up. So because I'm a used car dealer, I have the luxury of coming to these used car dealer auctions. And what I get to see is the actual repos that are coming through the system. If you look behind me, this whole line right here behind me, this whole row is mostly repos, and the reason I know that is because I know who's selling them. I know that it's a buy here, pay here dealer. And what I like to keep track of is the sheer quantity of what's coming through the system. Now, this one dealer that brings repos, they bring repos here every week. About a year ago, they would have maybe 10-ish repos that they would bring every week. And then now, you see, they have this whole row of cars that they're bringing to the system. That means that they're taking in a ton more repos than what they have been. And all this is to be expected because people aren't paying their bills. They're not able to pay their bills. So a lot of these buy here, pay here dealers, they're going to have consumers that are actually missing their payments, and they don't spend a whole lot of time waiting or trying to work with these customers. They're just going to go and snatch the car up. And these are prime examples right here of the cars that are actually getting repoed the most. Your Chargers and your Challengers, your Mustangs, your Camaros. We're seeing a lot of those, a lot of these toys that people bought that they thought they can afford. Inflation goes up, bills go up, everything goes up. So all these ballers that had all this money, now they don't have the money and now they can't pay their bills. So you know what? Baller's gonna walk. And I've always heard from other dealers, this is sad but kind of funny, that the best way to get back on your feet is to miss a car payment. And just so you can see, this is what a lot of repos actually look like. I mean, they come in with stuff like this and something like this right here. I mean, there's no windshield. That's paper or plastic. Yeah, that's the kind of care that you get from the repos. And this one doesn't even run. And you get stuff like that. So now it's not just these buy here, pay here dealers that we're seeing a big spike in these repos. It's also from the big banks. I go to other auctions where banks like Wells Fargo, Capital One, One Main, American Acceptance, all of these banks, they're seeing a big spike in their repo rates as well.
So Credit Acceptance just said that their default rates were coming in much higher than they expected. And you know what? They expected a very, very high number, and the defaults that they're actually seeing are smashing their expectations.
And when you go to the more prime borrowers and see these repo rates ticking up, that's more worrisome for the economy. Now, with these small buy here, pay here dealers, you always see that they have high repo rates because they've always charged too much for their cars. They've always had a clientele, a customer base of people that are on the lower end of the economic spectrum, so they always have had a harder time. So seeing repos at auctions through these buy here, pay here dealers is not a new thing. It's just the amount that they're bringing in is what's new. But when you're seeing all of these repos skyrocket through these what are supposedly the more prime borrowers, then that's what really worries me about our economy and shows me that our economy is not doing well at all, because people are going to pay for their house, they're going to pay for their phone, and then they're going to pay for the car. So when your car payment is number 3 on the list and that's not getting paid, then everything else below that is also not getting paid. So they're not paying their credit card bills. What they're doing is they're not going to eat out as much. And when all of this contraction happens in the economy, when the velocity of money slows down, that's when the economy gets really, really bad. That's when people start losing their jobs. That's when businesses will go out of business. They'll shut their doors because the money's just not going through the system. And if people aren't paying for their cars, they're getting them snatched up, then you know what? They're not going to be out spending money.
So another thing that just hit the system, our student loan payments are actually due again. And we're not yet sure what this is going to do to the auto loan delinquency crisis that's happening right now, but we do know it's going to have some effect because now we have more money that's coming out of the system on a monthly basis for a lot of consumers. So a lot of these people that were already tight, that were already struggling to pay their car loans right now, we add in this extra bill per month, and now that's going to push them over the edge, and they're going to have to decide at this point whether they pay these student loan bills that are coming in or they're going to pay their car payment because they can't pay both of them.
So now here's another thing that really worries me is that the repos that we're seeing coming through the system, the auto loan delinquencies that are actually being reported, this is just the tip of the iceberg. The reason being is because these bigger banks, they've actually been working with consumers. They've been trying to keep them in these loans because they don't want the cars back. The auto market, the wholesale market has actually taking a big hammering, and they know that if they get these cars back from these consumers, send them to auction, they're going to take a lot of losses. And the second thing is, there are not enough recovery drivers right now to get all the repos that actually are going to occur. It's so bad that Wells Fargo and Toyota Financial are actually paying a premium to these recovery companies to get in front of the line to try to get their cars back, that they know that they're not going to be able to work with these consumers to get any money out of them. So what does that mean? That means that Wells Fargo, Toyota Financial, they know that the market's getting bad, they know it's getting worse, they know that the wholesale prices are going to continue to go down. So they're trying to get their cars back right now so they can go ahead and dump them at auction. And because they're willing to pay this premium, that means that the amount of repos that are in the system that need to be picked up is massive, because they cannot find enough drivers to actually service the demand for these banks, for these lending institutions, for these dealers to actually get these cars back. And that's why I know that this repo problem, this auto loan delinquency problem, is much, much greater than any of us actually can know or anticipate, because there's such a backlog of these repos that there are not enough drivers to get them. And I know all of you out there are seeing this happen in real time too, where you are. I get so many comments saying, yeah, my neighbor just got his Charger picked up. Yeah, somebody in my apartment complex, they just got their car picked up. Yeah, my family member, they're not paying their bills, so they're about to get their car repoed. I see it all the time. This is happening in the real world, and this is a massive, massive problem. So one thing that's interesting about this repo problem is that there's not really any data out there that's going to actually track the amount of repos. Now, you have your big publicly traded companies, you have your Wells Fargos, your big banks that are going to show the delinquency rates, but a majority of repos that are actually going to come through the system are going to come from small mom and pop stores. And I can go ahead and tell you, Bob's Used Cars is not going to let any entity know when they're going to pick up a car whenever that customer misses a couple payments and they go snatch it up from their house. So why exactly are we going through this auto loan crisis right now? Well, there's quite a few different reasons. And the first one is the easiest one, and you can probably say it right now. Prices are and were too high. So people were actually paying way more than all these vehicles were worth, causing monthly payments to go through the roof. And you know what? They just couldn't afford it. And because the prices of these used vehicles were too high, because dealers were gouging people, because dealers were putting on add-ons on top of add-ons, on top of market adjustments, on top of nitrogen, what ended up happening is that banks had to write loans for these vehicles. So what banks were doing is they were actually loaning way over the values of what the vehicles were worth to get people in these loans. I've heard of cases where these banks were loaning 140%, 180% loan to value on a lot of these vehicles. And if it wasn't obvious to them, then this is an absolute setup for disaster for the consumer when you're allowing this consumer to borrow way over the value of this vehicle. So another big reason why we're seeing a lot of these repos skyrocket is because inflation, because everything got more expensive. So a consumer might have actually got into this auto loan when they could actually afford it by the lending practices standards at least. But now, as the price of groceries is going up, insurance is going up, rent was going up for them, then all their bills went up, and then that car payment, it was really high, but they could afford it before. But now, because everything else got more expensive, now they can't afford it. And they look at this car payment and they're like, you know what, I can probably go find something cheaper. I can go to one of these buy here, pay here dealers, buy something that's substantially less. And you know what, I'm going to stop paying this really expensive car payment because I can't anymore. And probably the biggest reason why a lot of these repos are absolutely skyrocketing through the market is that banks were too loose on their lending practices. What does that mean? That means that banks were actually giving loans to people who the bank knew they could look on paper and say, all right, you can't afford this, but you know what, we're going to allow you to get it anyway, and maybe you could make it work. And the consumer didn't know any better. They're like, okay, I can get into this Charger for $950 a month. I can make that payment. And you know what? They can't. And that's why it's sitting out here.
So one thing that's really fueling this repo crisis that we're going through is the negative equity crisis that is also going on at the exact same time. And what's happening right now is that the average consumer that's going in to trade their vehicle, they're actually upside down on their car $6,000. Now, in the past, negative equity has not been, it's not a new thing. There's always been negative equity in the system. Generally, when people would come to trade in their car, if it was 2-3 years old, they would have negative equity in their vehicle. The reason why it's different right now is because banks are actually tightening on their lending, so they are making customers come up with a larger down payment whenever they're trying to trade in these vehicles to decrease the spread, so the banks take on less of the risk, and these consumers, they don't have that money to be able to put down to get into a new vehicle. And here's what I know that there are a lot of people out there, at the first sign of any kind of mechanical issue with their vehicle, they're done with it. They don't want to go see a mechanic. All they want to do is go trade in their vehicle and get into a brand new one. But you know what? Because these banks are tightening up, because there's such a gap between what they owe on the vehicle and what it's worth, they're not able to trade that car in. So as ridiculous as it might sound, there are some people out there that will actually stop paying on their car because they can't trade in to get this new one. Their current car doesn't work and they don't want to fix it. So you know what? They're just done with it, and they're going to go buy a cheaper car. They're going to put some money down at a buy here, pay here lot and get started on some new payments on another car, and they're going to let their other one just get repoed by the bank. And I know that there's a segment of the population that actually do this because I hear them when they come into my shop. They'll say, okay, there's something wrong with my car. I don't know what it is. I'm tired of putting money into it. I'm just going to stop paying on the car payment and buy something else. I'm done with it. They can come pick it up, whatever. I told them it's in my backyard, and I'm just going to get into a new car. So because of this, because people are not going to be able to get out of some of these cars that they don't want anymore, the cars that they're stuck in, you know what? They're just going to stop paying on them. And when they stop paying on them, the bank will go get them, the dealer go get them, and that just adds even more repos into the system.
So now, what happens to a car after it's been repoed? Well, it depends on who the loan is actually for. So in the buy here, pay here spectrum of it, that's really easy. So the buy here, pay here dealer, smaller dealer, the car is going to be a used vehicle that's older. It's going to be not a brand new car, right? So what happens in those cases when a customer defaults on that, they miss a few payments, then the actual dealer is who is holding the note in most cases. And what will happen is that dealer will just go pick up that car, and if the car is in good enough shape, they most likely are not, but if that car is in good enough shape, that dealer will actually put it back on their lot and they'll resell it. They'll get the $1,000 down again and start someone else on the death spiral of these payments that they're probably also going to default on, and then just start the process all over again. And in the case of that buy here, pay here dealer, if that vehicle comes in and it's not worthy to be put back on their lot, whether it be just tore up cosmetically or mechanically just a turd, then what that dealer will do is like what this dealer does right here, and they will actually send the car to auction, and another dealer will buy it for a much cheaper price. They'll put the work in it that needs to be done to it, and then they'll resell it on their lot, unless it's just past the point of being fixed, past the point of being retailed again, in which case probably somebody that wants the parts or wants to junk it out, scrap it out, whatever, then they'll buy it. And that's usually the end of the lifespan of that current vehicle, and then it'll just be reduced to metal. So now in the case of the banks, when they're financing these much newer cars, these much nicer cars, the cars that still hold a lot of value, even if they're tore up, in almost every case, these cars will go directly to auction, where another dealer will actually buy it from the bank that's holding the note. And if that vehicle at auction brings less than what the consumer actually owes for the vehicle, then that consumer is then on the hook for the difference. But here's the problem for the banks, and going into a slower economic time, is that these consumers that got the car repoed, they didn't have the money to make the monthly payments anyway. So even if the bank does go after them for the difference, most of the time these banks are not going to be able to actually get it from the consumers. Yeah, they can put a judgment against the consumer and try to garnish wages or whatever, but a lot of times the banks are actually going to take big time losses. Now they write it off, they've done this for years, but the issue comes in with the sheer amount of these repos that are coming in and the amount of losses that the banks are going to take. That's what I'm worried about, and that's the trouble with the banks in this environment right now. Okay, so now those of you that are thinking that, okay, there's going to be so many repos that are pushed into the system that it's going to crash the car market, well, you know what, it's not. The problem is that we have such a deficiency of new car trade-ins, and for those of you that don't know how used car dealers like myself buy a majority of our cars, is that new cars get traded in for, those dealers send those trade-ins to the auction, and that's what I buy. But the problem is new car dealers are not selling a lot of cars right now, and because they're not selling a lot of cars, they're not getting a lot of trade-ins, and that's where a majority of used cars come from. So you've had this massive gaping hole of used vehicles that have been taken out of the market because the trade-ins aren't there. Even if we get an explosion more than we have now, double the amount of repos that we have now, it's still a fraction of the amount of vehicles that have been lost to the system because people are not trading in their cars. So repos are not going to be the answer. We need new dealers to sell cars, and we need them to take trade-ins.